Okay, I think we can start now. Good morning or evening, depending where you are, and welcome to our Caixin Global webinar. I'm Resumption, the moderator. Thank you for joining. This is the first of a series of webinars we plan to host. We have quite a few in the pipeline for the near future. But today, our theme is rebooting the economy amid the coronavirus. It's virus related. So first, let me express our sincere sympathy to those affected by this epidemic, and our thanks to the medical staff still on the front lines. I hope they take good care of their patients as well as themselves. With that, let's turn to the main topic, economics, the balance or trade-offs between work resumption and virus containment, risks and opportunities for business, and what all these mean to the world. We are pleased to have three speakers with us today. They are Dr. Wang Tao, Chief China Economist of UBS.
Hello, everyone. Thank you for inviting me.
Mr. Li Feng, founding partner of Freeze Fund.
Thanks, everyone. This is Li Feng from Freeze Fund, and I'm great to be here. And thanks for the invitation.
And Mr. Huang Shan, Deputy Managing Editor of Caixin Media.
Good morning. Thank you for having me.
Yeah. Also, as of now, we have more than 100 people in the audience calling in. Welcome to you all. First, I would like to invite each of our speakers to share his or her thoughts for about 10 minutes. And just a reminder, please put yourself on mute when you are not speaking. For those watching, you will find a little button on the lower side of your screen called Q&A. You can submit your questions there. In the second half of the session, we'll answer as many as we can. Now starting with Dr. Wang, who is also a managing director and head of Asia Economics at UBS Investment Bank. She has also previously worked as an economist for Bank of America, BP, and the International Monetary Fund. She's a frequent commentator and columnist for Caixin Media, providing thoughtful insights to our readers. For example, her team has been following the disease impact and implications in depth as it develops. In other words, she's on the front line in research and academics. So Dr. Wang, please go ahead.
Thank you for the very kind introduction. Thank you very much for inviting me again. So I would like to take a few minutes to summarize our view on the economic impact and policy response and the implications for the rest of the world. So on the first slides, I'd like to summarize the key assessment of the impact. It's actually, I just want to say upfront, it's actually very difficult to quantify the impact of the coronavirus. And we have to make a lot of assumptions on, first of all, the control of the virus, and secondly, on how fast the rebound will be, and thirdly, on also policy response. So in our current forecast, we assume the virus will be controlled in the first quarter, meaning after end of March, very few new cases, if at all, happens. And that means growth, the impact on the economy will be hit mainly in the first quarter, everything back to normal in the second quarter and onwards. And so in that case, we also made an assumption that the impact will mainly, compared to with a reference to SARS and so on, will mainly be in the consumer-related sectors, whereas production and investment will be hurt less. So currently, our first quarter growth shows a Q-on-Q contraction of 1.5%. It still leads a 3.8% year-on-year growth. And for the full year, then we assume second, third quarter quarter-on-quarter rebound at 10%. So a big V-shaped rebound, but still that only gets to us of annual average growth of 5.4%. I want to say first that there's obviously more downside risk to the forecast, especially given what we know right now. This forecast is made 3 weeks ago. And other points of the forecast, consumption will be hurt more, especially restaurants, travels, retail, and so on. And also there's already some production disruptions that will hurt trade. And also for corporates, earnings will be hit, of course, pretty hard, and we'll see unemployment rise. but we did not change the exchange rate and inflation forecast for now, and I'll explain why. So going next with a little bit more detail on, for example, what work is now in the next chart. Next slide, we show that you can see many people, all the sell side, many media also follow these indicators, daily indicators. The coal consumption of power plants, that is very low. It's about 60% compared to previous years. We also look at property sales. Sales are actually picking up in the last few days, but still only about 10-20% of what was usually the case after so many days after Chinese New Year. And the next chart, we also show that the traffic index, traffic congestion. So next slide, please. So yeah, so traffic congestion from Gaode map. Again, it shows little activity compared to before. And of course, the passenger traffic, you can see that before the Chinese New Year, it was almost as usual. Many people went home, but after that, passenger traffic volume is very low, meaning many people have not come back. And that means that even after more than a month of Chinese New Year, work resumption is low. And next table, we also show that provincial level work resumption. This we collect from official sources. You see that the top provinces, the large economic provinces, have shown relatively high work resumption rates for industrial sector. This is industrial sector. But I wanted to caution people that resumption doesn't mean full capacity utilization. Sometimes people are running very much below capacity. As for industries, the next slides, also it shows that the heavy industry sectors, such as steel and so on, probably are running at a higher capacity. But again, as I mentioned, in many areas, and especially small companies, the work resumption rate is still low. So that's why we say there's still quite a bit downside to our forecast. This week and next are critical. The government are now putting pressures, political pressures, for local governments to resume work and are trying to facilitate labor returning. But at the same time, of course, there is still the concern on controlling the disease. So controls on travel are still very much there in many places. So this week and next week is key. If work resumption does not get back more or less to normal by mid-March, I think there's serious downside to the first quarter. First quarter growth would be much weaker, and the Q-on-Q contraction could be much larger than what we assume now. On the policy response, next slide. So policy support so far focused mainly on liquidity provision, with central bank injecting liquidity, cutting rates, with on-lending support, and the Ministry of Finance and other departments giving tax cuts and fee cuts and providing some subsidies and targeted support. What we expect is that there needs to be more and will be more. The measures so far, apart from the central bank and liquidity to make sure that business and markets are operating, are functioning smoothly, other measures tend to be emergency responses. I do not consider them stimulus. I think in the current situation, when people cannot even go to work, giving them tax subsidy is not going to help them invest or spend more at this moment. And some of the spending will not come back. So we think that the government should increase spending on healthcare services, infrastructure, and so on. And we indeed expect that to come. But that will take some time. And we think that the impact probably will come more in the second quarter. Property policy, local governments are allowed to ease somewhat, but we don't expect any nationwide stimulus by the central government. One thing to note is that the coronavirus is, of course, a huge shock to people's lives, but also to the economy. But the long-term economic trend should not be altered by this. So after the big hit, we should see a rebound later on in the year. So, but the policy response, I have a few charts below to show very quickly, just the policy space is limited. Many investors ask us whether it's going to be growth can be rebound as fast as during SARS in 2003, or China will take out stimulus as big as 2009. And these next two charts basically show that this is very unlikely. China is in a very different stage, and also with current debt levels and worries about property bubble, we think the policy stimulus will be more measured. Finally, just a few words on the impact for the rest of the world. So the next slide. The next one, we show that there are a few main channels of impact. Of course, there's another channel, which is the spread of the disease, and that's a very recent development. But in terms of the economic channels, we think mainly through tourism, trade, and also supply chain disruptions. Tourism, Chinese tourism, outbound tourism is very large, of course, and the economies that will be hurt the most, it includes Hong Kong region, Singapore, and Thailand. And in terms of trade, many economies in the region depend on China as their largest market. That include Taiwan, that includes South Korea, Australia, Vietnam, Malaysia, and so on. So less economic growth and demand from China will also mean weaker exports from these areas, and Japan will be somewhat affected too. Finally, on supply chain, so you know that the integration of the supply chain today is quite intense, and especially in the tech, for example, electronics area, but also in automobiles and so on. We've already had stories of Hyundai and so on being affected. So this will also affect the North Asian economies. Finally, we expect these impact will lead to more policy easing from other central banks and more fiscal easing as well. And we expect the US Fed to cut Fed fund rates 3 times this year. I'll stop here. Thank you.
Okay, thank you, Dr. Wang, for the thorough studies. I think it's important to look at different indicators to get a better picture on work resumption. And also notable that we are on a different growth trajectory or economic cycle than in 2003. Now we turn to Mr. Li Feng, founding partner of Freeze Fund, a venture capital fund focused on consumer sectors as well as opportunities with unique technological innovation angles in China and elsewhere. Their successful investments include those in credit ease or 宜信, 360 Finance, 360金融, Bilibili or B 站, Lex, 英语流利说, and what we all love, 3 Squirrels, 三只松鼠, to name a few. Prior to Freeze Fund, Mr. Li was a general partner at IDG Capital. So in these difficult times, how are companies in different sectors doing? I think Mr. Li knows best from his position at the forefront of the market. Let's hear his observations. Mr. Li, please go ahead.
Yeah, thanks. This is Feng Li. Since we're doing the venture capital and then mostly the early stage investment, so we look things a little bit of trying to be a little bit of long term, and then at the same time we may be a little bit more optimistic than the average. So that's generally how the angle are formed. During this epidemic situation, we have actually conducted a research of our more than 100 portfolios, and then seeing what the situation will affect them, and then based on the survey with them, it looks like there are a couple of offline-based retail-related or consumer-related sectors are being affected more severe than others, and then but there are also 1/3 of the CEO, considering where our portfolio construction is actually about more than half of them are technology innovation related startups, and then about 1/3 of them are consumer related. And then during the among the tech sector, We think a little bit more than 1/3 of them are seeing new and then bigger opportunity at the situation or after the situation than before. So generally, that's how our portfolios are being influenced or reflected the epidemic the situation. And then based on our, can we switch to the other page of the PowerPoint? Yeah. In general, during our practice of the past 2 weeks and then before. And then when we look after the situation, it looks like we see there are more in the long term, middle to long term. There are more online and offline integration will happen, and then that's actually in the middle or long term will drive the efficiency of many sector consumer facing way much more than before. I mean, usually or possibly some of the offline retail facing sectors or business, especially those more business sectors are being affected, and then they probably going to be losing their business, or they probably going to be wipe off as well. But taking those positions will be those ones actually who doing the online and offline integration much better than before. So in the middle run, the whole efficiency will be drive up according to this situation, and that's one thing. And then the other one is like what we see in our, because we have a couple of portfolios are doing the automation, what we call the industry robots, and then they see a lot of actually they see immediate increasing need for the industry robots, especially within this month and next month, and then that's actually very crowded orders. So taking this trend is probably going to be affect the whole industry longer than this epidemic situation. So we see the level of automation will improve across the whole manufacturing chain. But of course, for the smaller business in this manufacturing chain, will be having a little bit of difficulty doing that. So taking a little bit of a longer time to see the situation, it may come with the consolidation of the manufacturing chain for which who actually adopt the automation better and then more than before. So that's another impact of the situation in the long term. And then it's not only within the medical related field, there are many other fields, including the smart city, including the logistic related. We see now, and then we forecast that will be happen later. The application of so-called the artificial intelligence is actually speeding up a lot, and then that's actually going to be affected by the next page of micro policy as well. So considering the situation, the long term, the middle to long term impact will be including the artificial intelligence speed up, and then getting more close to the real field use as well for the whole China, and then that will happen in many industry as well. So the next page, please. And then from our point to see the microeconomic policy, first of all, as there are going to be more economic stimulus policy, including both of the fiscal and then monetary policy as well. I think they are tangled with each other a little bit, because the government may actually see how the progress of the situation to decide it, which instrument is to be used, and then which can be used more as well. So this is a general view of that. And then based on our investment practice, we see, and then it's already happened. We think the first one as the infrastructure investment will be boosted up is actually the 5G related, because that solves a lot of things. First of all, that takes the right of the consumer behavior, and then a lot of long distance video related data, big data application as well. So considering the next point of speed up the technology innovation being more domestic, the easy way, and then the fast way to drive up that is actually trying to speed up the 5G infrastructure build up. So we have already seen the trend happen, and then we think it will happen in a much stronger way in the later half of this year. So that will affect a lot of other application and then technology related to that. So that's one thing. And then the third one is actually, we believe after this situation, the government will see, for a lot of reasons, the government will see how and why the China need to form a long, and then with the key innovation, key technology building manufacturing chain and then supply chain as well. So we see there going to be a much stronger effort from the government and then from the supply chain and from the manufacturing chain are trying to building the technology innovation as well. And that's a little bit of correlated with the page before when we're talking about the artificial intelligence and then the other things, the other technology things. And the last one of the micro policy related is actually we're going to be seeing more and more consumer-related stimulus. Currently, I think 2 or 3 days ago, we have already seen some of the policy regarding the cars, the automobile industry, and then from the consumer point of view, there are some of the incentive policy happen in different cities, and then we probably going to be seeing more of that from the government point, trying to stimulate trying to get the consumer spending speed up after the epidemic situation. So that's pretty much what we see as a VC angle as well, or as an investor angle as well. Yeah, we can turn the time to the other speaker.
Mm-hmm. Yeah, thank you, Mr. Li, for reminding us there are always opportunities for those who are prepared. In a sense, the academic only speeds up a transition of the Chinese economy to more knowledge and technology-driven growth model. Now we turn to my colleague Huang Shan, Deputy Managing Editor and Editorial Board Member of Caixin Media. He was one of the editors when Caixin was founded in 2009. Previously, he was our international desk editor, US Bureau Chief, and Hong Kong correspondent. We see Huang Shan, our spokesperson, since we count on him to represent us with visiting guests, including foreign diplomats, researchers, businessmen who came for better knowledge and understanding of China. Today, Huang Shan will also represent our colleagues at the EPIC Center in Wuhan. When I said earlier that we salute to the heroic doctors and nurses there, I should have said we are also proud that our colleagues have been working around the clock to send back first-hand stories. Caixin is the leading source for reliable and unbiased information throughout the outbreak. And Huang Shan is one of the leading editors on those stories. So maybe he can touch on two aspects, how we do the reports and the impact of the outbreak globally. Shan, please go ahead.
Thank you, Zhenxing, for your kind introduction. Thank you for having me, and it's my great honor to represent Caixin, the front runner in the academic reporting to make a presentation about the current situation and also its multi-dimensional implication for China and the rest of the world. So number one, I will emphasize that this epidemic or possible pandemic of this size will represent a multi-dimensional impact or challenges to China and the rest of the world. And as a Caixin reporter, I think our first mission is to be on the ground in the first place. So actually between the lockdown on Wuhan, the epicenter of the coronavirus outbreak, we actually were sending our advanced team on January 20th to Wuhan, which made Caixin one of the first Chinese media outlets to have reporters on the ground before the lockdown imposed on January 23rd. That really reflects our judgment and professionalism when it comes to this emergency issue. And if you are our frequent readers, you are not strange to our quick response to all these kinds of emergency situations like the Wenchuan earthquake, like SARS, and a decade ago, and also H1N1 2009. So all these public health emergency and also natural disasters. We were one of the first media outlets to sending our reporters and observers on the ground. And actually, we noticed the sporadic cases before the new year. And we actually ran a couple of stories, print and web-based story on a number of, at the time they called unknown pathogen, late December and early this January. So actually, we actually sound alarm to our readers. If you are keen readers of Caixin media, so you were definitely familiar with the timeline of our reporting. So we noticed that the cases were occurring in Wuhan, and so we tried to be the first to sound the alarm about the potential outbreak. And so after all, so we actually, when we sending the advanced team, until now, I think we have already have 5 or 6 persons in Wuhan and the Hubei province. And we interview all the stakeholders fighting the epidemic disease. We interview frontline medical workers to raise public awareness of the breadth and the severity of the novel virus. So everybody trying to draw comparison between this epidemic to SARS. So my argument is that actually the breadth and the severity of this epidemic actually far outweighs what we have seen the SARS epidemic. So I think our model, our forecast must be based upon a new kind of metrics, a new suite of metrics, instead of just draw a simple comparison with the SARS epidemic 16 years ago. So already we find that actually it's really multi-dimensional emergency situations. You cannot just put a spotlight on one sector of the overall or overall situation. So you must have the context of bringing all the stakeholders in the picture. So if we want to present a full picture of what is really going on in Wuhan and beyond Wuhan, you must have every stakeholder interviewed. So we interview community workers to tell our readers what a life was like and how infections, including the patients with mild symptoms or suspected patients, were screened and confirmed. I think it took quite a lot of time to get all these patients rounded up, right, and also get screened and confirmed. So people really regret for the lost maybe 1 or 2 weeks before a really impactful and effective target of the disease. But anyway, so I think as a journalist, we just did our part and make the stories public to our readers. And then we see how the medical supplies struggle to keep pace with the mounting demands in Wuhan, the rest of Hubei province. We still think that the medical supplies now is the kind of bottleneck when it comes to the fighting the epidemic disease. And we know actually, if you look at the stories about the economic revival, and everybody now talking about how we can revive economy and trying to produce sufficient supplies of medical supplies. So with that, I would say definitely we have several eyeball-catching stories about the epidemic disease, and particularly last night we just published the very heavy-duty stories about how the virus was detected actually in December last year, and also the scientists and the virologists on the ground actually have had present a case to the health commission officers. So definitely there's kind of we said daily delayed response to it, but our reporters will continue to dig into details and make this public to our readers. So then I will move to the how the epidemic speed-up changes that has been happening in China. Actually, I just draw a simple comparison, between before the epidemic and after the epidemic. So because I'm an international guy, so international relations guy, so I want to focus on the Chinese, already starting trend we have seen, and try to draw comparison between those. So before the epidemic, we see a trade war. Everybody talk about the U.S.-China trade war, and I think this is the biggest uncertainties surrounding the business community and also the geopolitical world. So the trade war, actually, along with other structural factors, has kicked off the relocations of some manufacturing facility from China. And I think the epidemic will, send warning, signals to the business community that you cannot rely upon China as the manufacturing center. So you need to really step up your diversification process. You cannot just put all your eggs in one basket. And then number two is that Chinese leadership actually has begun a shift of focus from the US to other regions, particularly the EU. We know that actually this year will be a big year for the EU-China relations, particularly in this September. So President Xi may head to Germany for a signing of the, we call the EU-China investment treaty. So I think definitely China will accelerate its strategic diversification and reduce its obsession with the US-China relations. And third, trend is that we have noticed that China has already increased stakes in international institutions and also being active in United Nations initiated activities. We know that China now is the second largest contributor to the operation fees of the United Nations, and also the biggest contributor to the United Nations-led peacekeeping activities. And I think in the wake of the epidemic, China definitely realized the importance of international organizations, particularly this time we know the WHO, World Health Organization. So China definitely will pursue closer international coordination with a focus on public health area, as evidenced by the intimate, this time, coordination between China and the WHO. And finally, is that the landmark, everybody talking about BRI, a Belt and Road Initiative for past 6 or 7 years. So I think the landmark project BRI has been slowing down in the wake of a criticism over debt traps and one-sided favors to Chinese contractors. I think last year we have seen that the BRI meetings in Beijing has actually shifted gear to a slow gear, and trying to send more cautions and warnings to the mega projects overseas. I think this time, when the liquidity now is really trickling down, and when China actually focus more at resource on domestic fronts, I would argue that all the stakeholders in the BRI projects, including state-owned financial institutions and construction contracts, will think twice before moving forward. It calls for great economic and financial sense this time to proceed with all its BRI projects. So I will stop here, and thank you for listening.
All right. Thank you, Huangshan, for sharing. Here I would remind our audience, we originally planned this to limit this to our intelligence service and premium plans. So please stay to the end to avoid missing out on future activities. Now let's turn to the second half, Q&As. Before this even started, we already gathered quite some questions when our readers submitted their registration. Also, we have live requests here. So I will combine some of them together. First question, I think, is to Dr. Wang. Just now you said, if we presume that the outbreak or the virus ended in Q1, maybe Q1's year-on-year growth could be 3.8, and Q-on-Q could be minus 1.5. Our question from the audience is, the market could be, the market view on growth is pretty pessimistic. How bad is Q1? And how about your forecast GDP of 2020 in total, please?
Thank you. As I mentioned, our forecast, current forecast is made 3 weeks ago. So at that time, we estimate the first quarter negative 1.5, Q on Q, 3.8 year on year. The year on average 2020 is 5.4%. So given the information we now know, we already mentioned there's more downside. So Q1 could be much worse. I don't know how pessimistic the market is. Because the capital markets, the A-share market, the equity market seems to have ignored this shock because obviously market has been very strong, and that perhaps is because people expect a lot of stimulus, a lot of liquidity, a lot of policy easing to come. Thanks.
Yeah, another question also to you is how to view the financial opening? Will the COVID-19 delay or speed up the momentum?
Financial opening, I don't think there's going to be much delay on that. So financial opening involve two areas. One is financial services. So China has, of course, have accelerated opening of financial services. So allowing foreign banks, security companies, asset managers, and so on to be in China with full ownership or majority ownership, and there's quite a few deadlines, for example, April 1st and so on. So from a China part, I don't think that's going to change. From foreign investors, will they delay it? If there is delay, it's only technical in the sense that because there are travel restrictions, people who are supposed to be here right now may take a couple of months to come. So I don't think there will be material delays on that. I think investors also understand that the right now the shock is a temporary shock. It's a virus. It does not change the long-term trajectory of China. In terms of financial markets opening, that's the second thing, which is allowing or inviting more foreign investors into China's equity and bond market. That opening is already underway. I think there has been, in the last 2-3 weeks, there has been quite a bit of inflows. Northbound money, although northbound money in the last couple of days may be selling at the moment, but basically that is also not going to change. So in short, I don't think that this is going to alter the direction or the policies on opening of the financial services and markets.
Yeah, our next two questions will be for Mr. Li Feng. Just now you said that the stimulus package could be entangled because there could be difficulties to identify which kind of measures are needed. So you also said you had surveyed some of the companies. First question, what do companies really want, or what do they really need? Second, will the stimulus take a more traditional approach, or will focus more on improving the healthcare system or smart city, etc.? Please.
I think there are a lot of questions, including this one. Because I'm not an economist, but based on our business practice, I think from the government point of view, it's very hard to, as for now, it's very hard to precisely predict how and how long the whole situation will end, and then the rebound will happen, and then at which kind of level. So I think because of the total debt level of China, and then according to the policy of the past 3 to 4 years, China are trying to change, or not change, trying to adjust the fundraising structure from the indirect to direct. So I think, and then considering there are a lot of other things, the pressure of the asset price, the currency rate, etc., the exchange, the currency exchange rate, etc. There are many factors affecting how they're going to be using the fiscal and then monetary policy, and then considering all the above factors, and then and as well as how long, and then how well the rebound will happen. So that's actually why they're entangled. And then according to our survey of our portfolio construction, I think basically at the panic period of the situation, which happened about like a week ago, there are many more small enterprises are trying to, of course, trying to cut their cost or trying to protect their cash flow. So they're looking more into the so-called fiscal policy. And then we actually, during the a little bit more than 2 weeks ago, when we doing the survey with each of our portfolio companies, we're trying to advise them to use a little bit, trying to use a little bit more of the bank loan, because we have done a lot of financial sector related investment as well during the past like 5 to 7 years. So we can see there are going to be a short-term stimulus plan from the monetary point of view. So especially towards the manufacturing related industry, the consumer related industry, and then a small to middle enterprise as well. So we're trying to encourage them to get some of the bank loan as well, taking the little bit of benefit from that side as well. And it will happen during the past week. Some of them are getting the loan, and then some of the bigger ones are actually getting very close attention happen during the past 3 to 4 days. And then it looks like that the monetary stimulus, policy stimulus will happen first, and then short term, and then the fiscal one will probably going to be the next thing for the small to middle enterprise looking forward after the situation. So that's our general feeling about that. And then considering how the technology are being speed up for the usage and application, because as from this epidemic situation and how the government effectively controlled the spread of the virus, it looks like a lot of things are critical. First of all, how to monitor. Second of all, how to systematically control and then moving things or resources. So that's why we see the from the sequence. First of all, the smart medical system. Second of all, the smart cities. Third of all, the smart logistic will happen from both of the industry level as well as the policy level to speed the system up. So that's actually our general observation as well as the expectation of the policy. And then the last one related to that is actually because we said we can forecast or we can expect the 5G infrastructure build up are going to be speeding up, because that's the that's the easiest as well as the most leveraged way to drive up the whole technology sector. And then building on top of the 5G infrastructure for 2019, there are less application on top of that. But after the epidemic situation, from both of the micro and then the macro point of the industry, the smart city, the smart logistic, along with the smart medical system, are both of the application built on the 5G infrastructure. And then so that's another factor will drive these technology or these application along with the 5G infrastructure to speed up at the later half of the 2020. So that's about the answer.
Yeah, I think most of you, especially Huangshan and Dr. Wang, mentioned on the global supply chains. My next question is, with the worrying situation in Korea, Japan, and now Italy and Iran, how this may impact China's plan to restore its supply chain and restart its export activities? Maybe this time we start with Huangshan.
Thank you. I think in these difficult times, common sense makes great sense. So I think most people will definitely think twice before they jump into, continue the business as usual model, right? And we have noticed actually more cases, reported outside of China than inside. And I think it's just a matter of time. This epidemic will escalate to a pandemic thing. And just the latest memory is about 2009 H1N1, a pandemic disease, rippling, rattling the global market and the whole globe. I would argue that definitely the people, particularly you have heavy concentration of manufacturing and sourcing business in mainland China, will speed up their relocation efforts and also try to diversify the risks. And as I mentioned before, that they don't want to put all the eggs in a basket. And that said, I think still we have noticed the strong, as Dr. Wang mentioned before, that the strong infrastructure here in China and also the well-trained workforce. I think it definitely takes time for the world to win, particularly the business community to win its link off a Chinese market. So it definitely takes time, but we have seen the clock has been ticking now. So the other thing is that I think when it comes to the supply chain debate, and actually I think definitely it's in China's basic interest of strong interest to move up value chain. So we really want to upgrade our industry portfolio and trying to make not just made in China but also the design and design in China. So I think definitely in China's best interest to upgrade its value chain and make it one stronger competitor in these high-tech technologies. I'll stop here. And actually I received a question from the audience about the Sino-US relations. My simple answer is that definitely with the US now, one of the key consensus in Washington, D.C. is to decouple from China, at least I think in terms of technology and some, economic financial services. And I think definitely China will impel China to look elsewhere to find alternative, for example, for the technological upgrade, for the management skill acquirement, right? So I think EU and other advanced economies will definitely be alternatives to the US market. So I think this is a reality. Nobody can ignore reality, just the continue the business as usual model. So I will not say the US-China relations will, come to ground to a sudden halt or just decoupling overnight. We have seen actually the ripple effects, affecting the market. So now the US is really worried about the community level epidemic. So nobody can be immune from decoupling from China, right? So I think this is a reality. And everybody noticed that the big economic and financial impact brought by this epidemic. So the real decoupling, or we call it across-border decoupling, is not reality, but partial decoupling, particularly when in the area of technology, I think is quite possible, and people will really speed up their relocation and also the overseas acquisition and mergers from outside from the US market.
Okay, thank you. Dr. Wang, do you have something to add? What kind of factors are permanently gone or changed?
Sure. I would like to, yes, add onto these two questions. First of all, on the supply chain, China, of course, is trying to resume production as quickly as possible, especially related to exports. But there has been and will be some delays in terms of parts and components that other countries may need. And so it's already affecting neighboring economies. And even when people say, oh, Samsung doesn't produce smartphones in China anymore, it's all in Vietnam, but we know the news is from Vietnam, is some parts come from China. So if they cannot get those parts in time, that will also be delayed. So I think at this moment, with more cases being reported in Korea and in Italy, the next risk is no longer that China's production delays will affect the rest of the world, but actually Korean production disruptions and also some European production disruptions may occur. So I think the new risks are emerging, affecting global supply chain. I think the market in the last few days, last 2-3 days, the global markets are reacting to that. I think when it was China, people tend to think that maybe still a little far from us. At least people are not yet observing the disruption from China, because usually Chinese New Year, the first 2 weeks after Chinese New Year, not much action happening anyway. So people haven't noticed that disruption. But now I think they are waking to the facts that there will be delays from China, but there are also new areas. But will the virus outbreak speed up the supply chain shifts? I beg to differ here. I think the supply chain shift has been happening in the past many years because of higher cost of labor, cost of environment, and so on in China. So that's been happening. The trade war between US and China definitely quickened that shift, because people want to diversify, want to lower their risk. But in terms of the virus outbreak, I think if China can resume work in the next few weeks, I'm not convinced that this will speed up the transfer of supply chain, because if you move to other countries, does that mean smaller risk from an outbreak disruption? I'm not so sure, because the other countries' emergency response system may not be as good as China either. And there are also other advantages. So here I'm not sure. On the trade war, US-China, so how does the virus impact the US-China trade deal? I wanted to just add that the trade deal, the phase 1 trade deal, involves significant purchase commitment from China, buying $200 billion more from US in the next 2 years. And so the virus outbreak will make that commitment more difficult, even more difficult to achieve. But I don't think the US, given its election year, will renegotiate this deal. So we shall see towards the end of this year. I think if US see that China has made a great effort in buying more agricultural products and energy products, they probably will be a little bit more relaxed. Otherwise, I think we are going to face more challenges on that front.
Some following up questions on just what you just said. How do you think that the virus could affect the agriculture sector? Because very soon it will be the starting point of reharvesting for the next year.
The harvest, the planting, you mean? Harvesting would be later, I suppose. I think the impact on agriculture, and especially on the grain front, will not be that big, because the controls, the restrictions, and so on mainly affects activities involving a lot of people, such as restaurants and retail and so on, basically where people congregate. I don't think that will affect a lot on the field as much.
Just now you also mentioned that the stimulus package would not be as big. Our audience asked the scale and timing of stimulus package, and how soon are we expected to go back to the growth projection before the virus?
So in terms of stimulus, some of that is already announced. You see that the Politburo and State Council are meeting very frequently, more frequent than before. They've already announced the on-landing and the tax cuts and so on. So the on-landing is total 800 billion RMB. And in terms of the tax and fee cuts, that's also a few hundred billion, more than 500 billion already coming through. In terms of spending, so far it's only 100 billion spending extra from the Ministry of Finance. I would expect that to increase significantly. And as I said, I think they should, at this moment, monetary easing is only helping companies to stay afloat. And investment intention will be very weak. Spending intentions will be very weak. Fiscal stimulus needs to play a bigger role. So far, the fiscal stimulus, the fiscal measures are really about helping, not about supporting growth yet. So the spending part needs to increase. So we think excluding these tax side, the spending package will be more than 1% of GDP, which is about 100 billion RMB. Sorry, 1 trillion RMB. So we think that that should be the size. In terms of when growth will return to the pre-virus path, I think if you take out Q1, you can say Q2 rebound will be on that path. But annual average growth, of course, will not be back to that level until next year. So our forecast right now is growth will be 6% next year because there will be lower base effect from this year.
All right, thank you. Our next question, let me see. Our next question is for Mr. Li. How's the sentiment of the limited partners? Are they holding back investing in China?
Say the question again? I just lost the first part of that.
Yeah. How was the what are the sentiments of limited partners who are investing in China? Are they holding back?
You mean the international ones or the domestic ones? I mean, I think there are two parts that as we are carrying of the RMB and then the US dollar fund. I think from the RMB point of view, currently because of 2 years ago of the new asset management rules, etc., it will affect a little bit of how the money being raised through the channel, especially the banks. But considering currently there are a lot of monetary related, let's say there are a lot of liquidity being provided, and then we can see the feedback from the capital market, from the A share market as well. So I think I will drive up the stock price, or at least hold up the stock price, and then that expectation and that kind of like effect will come into what we call the VC and NPE stage at the later half of this year, along with the possible policy change for the money to get into the VC and NPE fund. So that's how we see the domestic market. For the international one, I think as far as we know from our industry, the US dollar LPs, including both European, United States, and then other places in the world, are actually getting at least a little bit of more interest in China, considering with about 2 years ago. During the past 1.5 years, I think it will not be affected by this epidemic situation. So that's the general feeling.
Yeah, we talked about stimulus and we talk about good companies who are prepared. A follow-up question to Mr. Li is, how do you tell which companies are the real good ones? How do you tell which ones are simply get lucky?
In general, I think this is very this special situation of this coronavirus is actually a very sort of like a very interesting business observation from 2 points of view. First of all, it screened off some of the efficiency, or let's say digitalization, and not good enough company, especially the small to middle ones. And then that's one thing. And then this, on the second hand, it's actually pretty much, even though they have a short-term impact on most of the industry or company, but I think in the middle run, it will drive up some of the critical sectors, especially when it's related to both of the manufacturing along with the technology innovation. For those kind of like sector, it will especially getting focus, getting attention, getting policy, and then getting better than the expectation or average development after the epidemic situation, because it's actually because of this situation happen. First of all, they're the most efficient ones. Second of all, they're being favored by the policy. Third of all, the whole supply chains actually favor this kind of like a business or this kind of like a technology provider as well. So from every aspect, I think, as you said, the good and lucky one will first of all be the most efficient one, including the highest level of the digitalization of the company. Second of all, it will favor those actually provided the critical technology innovation, especially when it applies to the whole manufacturing or the supply chain.
All right, thank you so much. I think we are running out of time. Through the process, we have more than 250 audience here, and we have many questions that are unanswered. But we will put this recording online, and our experts will follow up and interact with our audience. And thank you so much for our speakers, Dr. Wang, Mr. Li, and Mr. Huang, for providing such an amazing dialogue. And also thank you to our audience. Like said earlier, we are planning more webinars. Your input is highly valued. So please help us to fill out a feedback survey, which will take you 2 minutes. For today's audience, we will also give out a 30% of coupon code for our annual subscription packages. Check out the link and code in your chat box. Then goodbye and stay safe. See you next time. Thank you.
Thank you.
Yeah,
Thank you.